Hi, folks. It's a pleasure to be here at the ironically named No Free Lunch series. And looking around, I see some familiar faces. I think a couple of you in the room have seen me talk about some of the research I'm going to talk about today. So don't give it away, okay? Don't give it away before I get there. I don't really have time to get into more than one piece of research and maybe a little bit of a snippet about some other things. So women in management, it's a big topic. It's one that's probably at the forefront or background of many of your minds if you're contemplating a career, and you're female, of course. So here's some statistics for you from the S&P 1500. With this crowd, you probably know what the S&P 1500 is, but I'll just say it anyway. It's a stock market index from S&P that's supposed to broadly replicate U.S. corporate life. So it's got a bunch of big firms, the S&P 400, some slightly smaller ones, and some slightly smaller ones still. And what I have here are three graphs across time. The bottom one, the green one, is one you're probably read about. It's basically the percentage of these firms in any given year that have a female chief executive officer. And you see it's gone from basically 0 to some number that's still pretty close to 0, about 2.5%. And if you take this for the next few years, it's only gone up very, very slightly. What I have here, though, are two lines that graph the percentage of women in what you might call a top management team, like the top 4 to 7 people who run the company. This is not just the CEO, but the CFO, the COO, head of important subsidiaries, and so forth. And what you see is that even as of 2006, and again that's still true out to 2011 and 12, only a minority of firms have even a single woman on their top management team. And in fact, of all the executives on top management teams, women account for only around 9% even today. So that's something a lot of people are paying a lot of attention to. There's obviously one might argue there's obviously a moral case for increasing the level of gender equity in top management, right? But is there a business case, right? Well, one sort of obvious business case is that, there seems to be some sort of friction in here in the human resources process. I mean, maybe it's the preferences of women, maybe it's sexism, maybe it's some sort of systemic thing, some combination of lots of different factors. But if you think about having a woman who joins your firm after getting the Columbia MBA and then works there for several years, moving up through the ranks and gaining a lot of valuable human capital, and then she leaves for whatever reason, other than poor performance, that's kind of a human resources failure on some level. You're losing someone in whom you've invested a lot. So one might argue, just having a more meritocratic process that avoids this kind of attrition would be good. And there is some existing research that sort of looked at firm A, where there's more women near the top, and firm B, where there's fewer, and said, well, hey, look, firm A on average performs better. But as scientists, we're not really so satisfied with those kinds of comparisons because there could be a million reasons why firm A and firm B are different, and the differing levels of female participation at the top could just be one artifact of those differences. So more broadly, are there any other reasons why it would matter to have some level of gender equity at the top, at least a couple women on the top management team? Well, it turns out that diversity in general seems to change how groups make decisions. Now, it doesn't have to be gender diversity. It could be Swedish people on a team with Danish people. It could be Columbia MBAs collaborating with NYU MBAs, if you deign to do so on something, and there's on a particular project. And there's it's just as if there's two reasons for this. On the one hand, when you have two different groups of people or three different groups of people from different backgrounds, they tend to know different things and have different skills, so they can bring more to bear on a particular problem. But what's perhaps most interesting of all is even when that's not true, even when you set things up so that the two groups don't know anything different from each other, there's something about different surface level diversity that triggers a very different kind of decision-making process. Oh, because I'm white and you're Asian, you must know something I don't, and it changes the way we relate to each other. And is that a good thing or a bad thing? Well, it kind of depends. If you want to make decisions very, very quickly with a minimum of conflict, having a non-diverse team may even be better. But if you want to get people to really think a problem through and avoid groupthink, which is really more the situation you would expect to see in top management, diversity seems to prompt more thorough search for answers. Another more controversial one is that maybe on average men and women don't manage exactly the same way. Now, people have very strong opinions about this one, okay? They have very strong opinions But there's a bunch of evidence, both from laboratory experiments with MBA students and executives, and from these practitioners who've worked for like 30 or 40 years and sort of write these sort of my 50 years working for the Sears and Roebuck company kind of books, where people say things like this. Women on average seem to adopt a more democratic, more collaborative approach to management than the men that I've seen. And it's sort of encapsulated by this quote, women like power, but they like to share it, they like to be more collaborative. I mean, we can agree or disagree, but there's at least a prima facie case that even if each person's an individual across two populations, the average may tilt more one way for men and more one way for women. So is this a good thing or a bad thing? Well, if it's encouraging the group to work together better under certain circumstances, maybe it's a good thing. We'll come back to this issue in a moment. Motivation of women managers. I hear about this all the time when I talk to female practitioners. I knew I could make it in the firm, say a law firm, because I could see there were some women partners there. There was at least a chance for me. There's some idea that if there's a woman in senior management, or it could be people of the same race as you in the senior management, you're in a minority, you feel as though you have more of a shot. There might even potentially be someone who would mentor you for social reasons. One of the biggest issues behind people who are not in the majority in a given company getting ahead, it's mentoring. People who are part of the majority group are much more likely to find someone senior who looks at them and says, you've got what it takes to be the next star in this company. I'm going to take you under my wing. Women in a mostly male firm find that a lot harder. But if there's some women near the top, they could, at least in some cases, serve as mentors. But not always. Anyone here heard of the queen bee syndrome, by the way? Sometimes even women say, the worst manager I ever had was a woman. She didn't want anyone near me. So there is a countervailing case here, too. And finally, is this finally? Let me make sure I'm making a good promise here. Yes. Finally, there is this idea that when there are a lot of women in an organization, even the men behave differently. Right? Now, here's a quote. I don't know if this is easy to see. This is from a law firm. This is a guy talking. Okay, this is a guy talking. What does he say? He says, women bring something to an all-male institution when you integrate it. Basically, when the men are around, they sit around talking about sports and trying to out-macho each other. But when there's more women, they tend to sort of moderate that behavior, not only in terms of what they themselves say and do, but in terms of the way the men act. That's what the rest of the quote essentially says. Okay. So as I said before, there's this existing research out there that sort of compares firm A with firm B. And firm A has more women at the top than firm B, and they say firm A performs better, but no one ever really found that very satisfying for two reasons. There could be a million reasons why firm A and firm B are different, and the fact that you see some women at the top of firm A is just an artifact of that. And also, even if you do find performance differences, it doesn't say much about why. So we were going to try to address that with a specific piece of research. So what did? We went back to that S&P 1500, and we took advantage of the fact that you got an S&P 1500 that's 1,500 firms in any given year, and over the course of, 20 years or so, you're going to have about 2,500 firms that are going to go in and out of that index, right? And what we're going to do is we're going to look at every single firm that's in that index and compare it with itself when it has at least one woman on its top management team of 4 to 7 people and when it does not. Could it be that the very same firm would perform better or worse when there was one woman than when there weren't? That's what we were going to test. Now, is this a perfect natural experiment? No, because firms do change over time. But it does take away a lot of those things that you might worry about as a researcher, because organizations don't intrinsically change that much, right? I mean, Columbia, I've been here a few years. I guess what was my first year? 2007, right? When I came in 2007, the school was a little bit different. But 2007 Columbia is a lot more similar to 2012 Columbia than 2012 Columbia is to Wharton today, right? The changes are very small. So this is what we basically found. And this is just the market to book value. You want another measure of profitability, return on assets, return on equity. It really doesn't matter. Just from the simple expedient of having a one woman or more on your top management team versus not, the same firm generated, well, in this case, about an extra $35 million of market value. 1.6% vis-a-vis the average size of the firm. Earth-shatteringly huge numbers? No. But look at how CEOs sweat over the tiniest bit of earnings per share in any given quarter. Certainly enough to be meaningful. And it's only the simple expedient of one woman on your top management team versus not. Okay, so that's some progress, but we still don't know really anything about what might be driving this, and so we were interested to dig a little deeper. So I don't know if maybe you've gotten this in some of your courses or have seen this in some other venue, but one thing that we do know about how to be a good manager is that, I mean, think about two different kinds of management styles, right? If you're going to be like a top-down dictatorial person, do this, do that, micromanage, you may get your people to jump, just say how high when you ask them to jump, right? But you're not going to be generating a lot of creativity out of these people. They're not going to be coming to you with new innovative ideas. If you want to get your employees to sort of come up with bottom-up innovation, then you've got to be more of a mentor than a dictatorial manager. You've got to encourage them to speak up. You have to be more democratic in your approach. Well, lo and behold, that should sound awfully familiar, folks, because that's basically word for word what at least some social psychologists and some former practitioners were saying about how men and women tended to manage differently, with women tending to manage a little bit more this way than men on average. Well, if that's true, then when firms are more focused on a strategy where innovation matters, we should see a larger increase in firm value, right? So we went out and we used a standard measure of innovation, which is how much a firm was spending on R&D. Now, that's not the only, it's not the only way you can measure innovation, but it's a standard one, and it's one that we could see in these data. And what did we find? Well, we found, amazingly even to us, that this essentially accounts for the entire positive benefit. If a firm isn't really doing nothing with innovation, they're basically just doing what they've always done, we don't see any benefit or any cost to having females in top management positions. But the more focused on innovation they are, the bigger the benefit, lo and behold. So where does that leave us? Does this prove that women manage differently than men, and they do so specifically by managing in a more democratic style? It doesn't prove that. But think about where we now stand. We have laboratory experiments where you can observe exactly what people are doing and even what they're thinking when they self-report it later. Artificial settings, but we see these differences in managerial style. We have these former practitioners who are telling you all these anecdotes, some of them women, some of them men, saying they've seen these differences in managerial style and those can be beneficial. And now we have large sample data. There's at least a prima facie case that something meaningful here might be going on. Okay. I'll conclude on this one with a couple of thoughts. Number one, I mean, if this is in fact the case, if men and women do manage differently, is this something that only women can do? I mean, I would probably say no, but we don't really know. Why do we have these gender differences? I mean, this goes back, I mean, you can tell a very long story about how, tribal warfare and the adoption of plow agriculture and various other things led to different social expectations about the behaviors of each gender. And then when you're born and the society has its expectations, girls are steered that way and boys are steered this way. It's almost impossible for us to know if these differences are real, how much of it is a function of nature and how much is a function of nurture. Is this, who runs these companies? People my age and older. Would these results still obtain when you folks, well, some of you are my age also, but when the MBAs in the room are running these companies? It's hard to say. I mean, one thing I've observed teaching is that the social norms and social attitudes of people in their 20s and early 30s quite different people in their 40s and 50s and 60s. Maybe this is out of date. And by the time you folks take over, it won't matter anymore. And finally, and this is probably the one that I'm most concerned about, is that we got to avoid different kinds of stereotyping. You talk to a French person who lives in the U.S. It's like, oh, you're French, so you should pick out the wine. You should open the bottle. You're French. You got to know this stuff. I mean, it gets a little silly. That's a social thing, but we don't want to be in a situation where we're hiring women. Wait a minute. We hired you. You're female. What are you doing giving orders to everyone? You're supposed to be a democratic manager. I mean, we don't want to have a new kind of stereotyping just because of this kind of research. Okay, how am I doing on time, Charles? 5 minutes. About 5 minutes. Okay, so that was one piece of research. Let me tell you very briefly about a couple other things without getting too into it. I'll start with this one. So that previous paper, or research, if you like, was about the performance implications of having women in top management. There's sort of what you call an antecedent question. What jobs are the women in? What are they in? And it turns out there's some very systematic differences. Now, some of those differences may be a little bit surprising. So we tend to think of women as not doing like accounting and finance that much. I mean, of course, there are women in finance. I mean, Wall Street's hostile to women. That's what they say. So if I asked you, do you think that relative to their average, women are more or less likely to be chief financial officer? Many people would say, well, less likely because that's finance. In fact, they are much more likely to be chief financial officer. They are much more likely to be comptroller. They are much more likely to be chief accounting officer. What's driving this? In general, women are much more likely to have senior professional positions. Chief financial officer, chief legal counsel. Something that looks like you're a very senior support staff person where you have a team of like 20 people at max, even in a large company. What we see very, very, very few of, even fewer than chief executive, are women who have senior line positions, like you're running a subsidiary or you're running a division, like actually having many, 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 many people working for you where you're in effect running part of the organization that actually generates the dollars. That's where we don't see the women. Women tend to be over-dispersed. What do I mean? Well, imagine that every seat in this room is a top management position, and I just took a small number of women and I randomly dropped them in. You would see some clumps and some clusters, and also some isolates, some women somewhere over here. Oh, I'd not violently drop them in. Randomly place them, okay? Randomly place them, right? But what we tend to see is almost like women are like two magnets of opposite polarity. If there's one woman in a particular firm, the odds that another woman will be in a different kind of position in that firm is much, much, much lower. In fact, having a woman CEO makes it less likely you'll have a woman in any other position. Whatever she's doing, she's not helping other women get top management jobs, which is a little bit surprising and a little bit depressing. And one last thing I'll mention very quickly. This is, in a way, I wish I had more time to talk about this, but you know, clearly one of the things that drives, well, I would say clearly, the level of female representation you see in given firms, or even within parts of firms, are the attitudes of the male executives who work there. I mean, that's common sense. I have some research here, which is I'm happy to talk to you about later, which essentially shows that whether a senior male manager has a child, and specifically the gender of that child, has a pretty big influence on his receptivity to women, at least in terms of how much he's willing to pay them relative to men. I mean, the headline takeaway from this basically is that when a CEO has his first daughter, the gender wage gap in the firm shrinks, whoosh, like this. So I'll stop there. Thank you very much.